This is Jim Emter, Van Ahn Company, Alexandria, Minnesota, with their closing grain and livestock comments for January 23rd, 2018. Corn market down 3/4 cent to a penny. That is off the lows a little bit, but still weaker on the day. Soybeans came from higher to lower, back towards steady, a little higher, up 2 to 2 1/4 after a pretty wide trading range today. The Chicago wheat market down 4 1/4, Minneapolis down 1 3/4 to 2 1/2, and Kansas City down 5 1/4. So little weaker tone to the day. Obviously, the bean market did start higher, traded up near that 988 level off the March, only to settle back down, trade to nearly 370 or 979, and then kind of came back here to settle around par, up 2 cents. That's really the underlying token right now. Still trying to understand where the problems are in Argentina, how bad they are, how much was too much rain, and also what drying conditions we've got as we work ahead. So a market a little bit on edge here, but up into our selling range between 985 to 1003, and that's an area we continue to plug as a key interest of resistance, and an area we think producers should be working to sell out of old crop beans and get a good start to new crop marketing with November 18 above $10. The corn and wheat markets continue to struggle. They just don't have momentum or pizzazz right now. Corn market got under 350, but luckily enough came back through it, so we're stuck in this 350 to 354 range. Sooner or later we're going to take this out. If we can get above 354, we're going to open up, in my opinion, 365 price counts. If we fail here, down possibly to 345 to 343, look for that to be the range. And the wheat market kind of getting back down here to key support levels. You start talking winter wheat down to the 410s, or Minneapolis at around 595, and those are pretty good support areas from our vantage point. As we look ahead, like I said, we think opportunities will come in these two markets, but beans really the market of opportunity right now. Feeder cattle market up 115 to 125, live cattle up 75 to 117.5, hog market up 45 to down 47.5, so a little more mixed bag there. Let's start with the hogs. You're looking at a circumstance where we've come up, got near the highs and broke back down. We continue to think nearby prices in that 73 to 74 mark, and summer months in that 86.41 to 88 level are very good areas that we should be marketing at and be attentive to. When you look to the feeder cattle, live cattle market, some nice recovery here, another stronger day, and this is getting us near our live cattle price counts. We did trade over 125 in the April, and as you start challenging this 126 to 128 mark, we really think that's a good area to market nearby cattle, and that's 117 to 119, 120 out in the deferred. So those are areas that we think producers need to be zoned in and on. The feeder cattle going to be more along the ride here, more along for the ride, I should say. But as we start talking over 150, we'll be a little more serious about having some near-term marketing on feeders that need to move here March, April, May, and into June. This has been Jim Emter, Van Ahn Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results. This is a solicitation.